Welcome to Trading Mindset Lab. Here are 8 real-world tactics to help you survive and thrive in the markets. If you're tired of blowing up accounts or trading on emotions, this is where it stops. Let's build discipline, protect your capital, and trade like a pro. I know you have heard this before. Always risk less than 2% per trade. But let's be honest, we all want to all in. Let's be real. You have heard this rule 100 times. Always limit your risk to under 2% of your account per trade. But let me ask you something. How many times have you actually followed it? And how many times have you said to yourself, just this once, I'm going in heavier. This setup is too perfect to miss. Yeah, I've been there too. Every trader has. Because here's the truth. Discipline is boring. And temptation is loud. You open the chart. Everything lines up. Price action, indicators, volume, maybe even a news catalyst. You start calculating, but not your risk. You calculate your potential gain. If I just risk 5% this time, I'll double the account in 2 trades. Sounds smart until the trade goes the wrong way. And suddenly, you are not managing risk anymore. You are managing regret. Here is what they never tell you in trading books. The hardest part of trading is not entry, not exit. It is restraint. Because deep down, we all want to hit it big. We all want that trade. The one that makes us a legend. The one that erases all past mistakes in one shot. That's the fantasy. And it's the exact thinking that blows up accounts. Slowly, then all at once. When you risk more than 2%, you are not trading anymore. You are betting your ego. You are betting your need to be right. And the market doesn't care. The market is a machine designed to crush emotional decisions. And oversized risk is the most emotional move you can make. You want to know the irony? The traders who get rich are not the ones who swing for home runs. They are the ones who survive, who take hundreds of small, boring, calculated trades, who protect their capital like a sniper protects bullets. One shot, one purpose. If it's not clean, don't pull the trigger. I remember a guy in our firm, fresh Ivy League grad, smart as hell. He joined with fire in his eyes, started swinging 5-10% risk per trade. Go big or go home, he said. 2 weeks later, he was gone. Wiped out. Couldn't handle a simple drawdown. You know what his problem was? He thought trading was a battle against the market. But the real battle is internal. It's between your discipline and your ego. So here's the brutal truth. You don't need to win every trade. You don't need to catch the top or the bottom. You don't need to go all in. You just need to stay alive. You limit your risk to 2%, not because it's safe, but because it's sustainable. You can lose 10 trades in a row and still have over 80% of your account. You live to fight another day. You give your edge time to work. Because that's what professional trading really is. Stacking small advantages over hundreds of decisions. Let me tell you what changed my game forever. The day I stopped trying to impress the market and started protecting my account. I stopped chasing that one big trade. I started playing defense like a pro. And guess what? That's when the wins started piling up. So next time you feel the urge to double your size, pause. Take a breath. Ask yourself, am I trading my system or am I trading my emotions? If the answer is emotion, walk away. If it's your system, follow the plan. And never ever risk more than 2%. Because no matter how good the setup looks, it is never worth blowing up your account for one moment of excitement. Stay sharp. Stay disciplined. Survive, and you will thrive. Always use a stop loss. Skipping it is financial suicide. Let me say this straight. Trading without a stop loss is like driving a Ferrari downhill with no brakes and thinking your reflexes will save you. Every trader, especially when new, has this dangerous moment. You find a perfect setup. The trend is clear. Momentum is strong. You enter. And just before placing the stop loss, you hesitate. You whisper to yourself, this one's different. I'll watch it closely. If it turns, I'll close manually. Let me guess how that story ends. Price reverses. Fast. You freeze. You hesitate. And then you hold. You hope. And then you start praying. And before you know it, a small red candle becomes a financial forest fire. We have all been there. Because deep down, we hate being wrong. Setting a stop loss feels like admitting we could be wrong before we're even right. But here's the truth. Smart traders don't try to be right all the time. They just control what happens when they're wrong. The market owes you nothing. not a bounce, not a pullback, not even a warning. It moves how it moves. And if you are caught in the wrong direction without a stop loss, you are not trading. You are just bleeding slowly. Let me tell you something I learned from a veteran floor trader back in Chicago. He said, the size of your stop doesn't define your skill. The fact you use one means you'll be around long enough to get skilled. Think about that. A stop loss is not a sign of weakness. It is a seatbelt. It protects your capital. It protects your emotions. It gives your system structure. It lets you lose small and move on. No drama. Now let's be practical. A good stop loss is not random. It's not just 20 pips or 5%. It's based on logic, structure, volatility, support, resistance. You place it where your trade idea becomes invalid, not too tight to get wicked out, not too loose to make it meaningless. Here's a real story. A friend of mine, let's call him Mike, had a $50,000 account. One day he spotted a clean reversal on gold, RSI divergence, triple top, candle confirmation, everything lined up. But instead of placing a $500 stop, 1%, he thought, this is too obvious. No way it goes wrong. He went in with no stop, watched the trade live. First it dipped, then dropped, then crashed. He kept thinking, it'll come back. It didn't. He lost $18,000 in one night. That's the price of ego. That's the cost of not placing a damn stop. And here's the worst part. It's rarely about the one loss. It's what that one bad trade does to your psychology. You lose trust in yourself. You hesitate on the next setup. You revenge trade. You spiral. And the game is over. Look, you can survive a small loss, but you cannot survive a loss that wipes out months or years of progress. So here's the mindset shift. A stop loss is not a backup plan. It's not optional. It is a non-negotiable rule. It is your way of saying, I value my capital more than my opinion. If you want to play this game long-term, if you want to trade like a business, not a gambler, then your stop loss is your insurance, your safety net, your best friend. Set it, respect it, never cancel it, not even once, because you don't rise in this game by avoiding losses. You rise by mastering how small your losses can be. Overtrading is the silent killer. More trades don't mean more money. Let me be brutally honest. Overtrading is not a trading problem. It's a psychological addiction dressed up as ambition. You sit down at your desk, charts open, screens lit. You tell yourself you'll wait for the perfect setup. You tell yourself today you're disciplined. 10 minutes pass, nothing. 15 minutes, still nothing. Then suddenly, a candle moves fast. RSI is near 70. A news headline flashes across your screen, and boom, you enter. No plan, no signal, just a rush of FOMO and boredom disguised as opportunity. You don't admit it out loud, but deep down, you're not trading the market. You're trading your own anxiety, your own need to feel in control, to do something. That's what overtrading really is, a way to silence the uncomfortable feeling of waiting. Because waiting feels like weakness. And taking action, even reckless action, makes you feel alive. But here's the catch. The market doesn't pay you to be busy. It pays you to be accurate, to be patient, to wait like a sniper, not spray bullets like a maniac. In this business, you don't get rewarded for effort. You get rewarded for precision. And the truth is, most of your money will come from a handful of A-plus setups, not the 20 random trades you forced while trying to feel productive. Let me share something that changed how I trade forever. An older trader once told me, the difference between pros and amateurs is not the strategy, it's how little the pros trade. That hit me hard, because early on, I thought I needed to be in the market all day, every day. I believed the lie that more trades meant faster growth. But my P&L told a different story. The more I clicked, the more I lost. Why? Because when you overtrade, your standards drop. You chase mediocre setups. You start trading noise, not signals. You lose emotional capital, even if the trades are small. And worst of all, you start to believe that trading equals action. That mindset will drain you, financially, mentally, spiritually. Now I have a rule. If I don't see my exact setup, I don't trade. Not close, not maybe, not I think it could work. It's either clear or it's nothing. And yes, that means I have entire days with zero trades, sometimes even a week. But when the right one comes, I strike with full confidence. And more often than not, that one trade pays for all the waiting. Here's another brutal truth. Most overtrading happens after losses. You take a hit, your ego gets bruised, and instead of stepping back, you step in harder, trying to win it back. That's not trading, that's revenge. Or worse, you just can't sit still. You mistake movement for progress. But in trading, more activity often means more damage. So what's the solution? Build a checklist and only trade when every single condition is met. Set a daily trade limit, 3 max. If you hit it, walk away. Track your trades, not just win rate, but emotional triggers. Force yourself to take a break after a loss. Let your mind cool. Know this: patience is a skill, waiting is work, flat is a position. And most importantly, learn to love silence. Learn to love doing nothing, because when you can sit in front of the market and not feel the urge to jump in, that's when you know you're evolving. Here's the bottom line: amateurs trade because they want action. Professionals trade because they want results. Stop overtrading. Your future self will thank you, and your account will too. Cut your losses fast, because hope is not a trading strategy. Let's talk about something no one wants to admit: gutting it out, holding on. Hoping the price comes back. You know the feeling. You enter a trade, it starts moving against you. Not much at first, just a little wiggle. You think it's just a pullback. Then the candle turns red, then another. Suddenly you're down more than you expected. And here it comes, that little voice inside your head. Just give it a little more room. It'll bounce. It's not a loss until I close it, right? Maybe I'll just move the stop once. That right there is the beginning of a slow death. You're no longer trading your system, you're trading your ego. Let's get something straight. The market does not care how you feel. It doesn't care how strong your conviction was. It doesn't care how many indicators lined up. When the price goes against you and breaks your trade logic, the market is giving you a gift. It's telling you, you are wrong. The pros listen. The amateurs fight it. And that fight, that emotional refusal to accept loss, is what we call going low. Holding on to a losing trade is not strength. It is denial. It is the psychological equivalent of sinking in quicksand and thinking stillness will save you. I've seen traders blow up accounts, not because they were bad, but because they couldn't admit one trade was wrong. One trade that they let turn into a monster. Because they were too proud to take the cut, too scared to lock in the red. But here's the truth. Cutting a loss is not failure. It is strategy. It is survival. Think about any successful trader, hedge fund manager, prop firm veteran, even retail legends. What do they all have in common? They cut fast. They cut clean. They never fall in love with a position. Here's what I've learned. Every big loss starts as a small one you refuse to take. Let that sink in. Now let's flip the script. Imagine treating your trades like employees. You hired them because they looked promising, but now one is underperforming. It's hurting the team. What do? You fire them. You don't beg them to improve. You don't give them more time. You cut them because keeping them around damages your entire business. That's exactly how you need to treat a losing trade. Detach, decide, act. Want to know a secret? The most confident I've ever felt as a trader was not after a big win. It was after cutting a loser fast. That's when I knew I had leveled up. That's when I felt in control, not of the market, but of myself. And that's the game. Not controlling price, not predicting the future, but controlling your reaction when it doesn't go your way. So how do you train this? Before every trade, define exactly what would invalidate your idea. Write it down. Stick to it. No moving lines. No exceptions. When price hits that level, exit without hesitation. Don't look back. Don't re-enter emotionally. Walk away clean. You're not here to be perfect. You're here to protect capital, to manage risk like a professional. And sometimes the most powerful move in trading is the one that says, this isn't working. I'm out. Because here's the thing. You can always re-enter. You can always find another setup, but you can't recover from an account you blew up because you hoped it would turn around. Hope is not a strategy. Discipline is. Cut your losses early, not because it's easy, but because it's necessary. This is not about pride. It's about longevity. Trade like a pro, cut like a sniper, survive like a champion. Position sizing is your true edge. Size your trades with math, not mood. Let me ask you something simple. How do you decide how big your next trade should be? Be honest. Do you size it based on how confident you feel? On how perfect the setup looks? On how much money you want to make today? If so, you are not trading. You are gambling with a chart in front of you. You could have the best system in the world, but if your position sizing is random, emotional, or based on gut feelings, you are one oversized trade away from disaster. I've seen it happen. A trader wins 3 times in a row. Confidence kicks in. Next setup looks great. He says, screw it, I'm going big this time. He doubles the size, maybe triples it. And that's the trade that turns against him. Not only does he lose the money, he loses control. He loses confidence. And just like that, the account goes into a death spiral. Why? Because he wasn't trading the setup. He was trading the emotion attached to the size. Let me tell you something I've learned the hard way. Your brain lies to you in real time. Your capital does not. Position sizing is your truth. It's the most honest part of your trading. It tells the market, I'm not here to get rich quick. I'm here to grow consistently. Let's break this down like a pro. Your position size should be determined by risk per trade, not by profit goals. Start with how much you're willing to lose. Let's say you only risk 1% of your $10,000 account. That's $100. Now define your stop loss. Maybe it's 50 pips or $2. Use that distance to calculate how many lots or shares you can trade. That's it. Objective, repeatable, unemotional. Like a machine, you're not guessing, you're not hoping. You're sizing your trade to survive 10 losses in a row and still come back. Because here's the dirty little secret no one tells you in trading rooms. Sizing too big doesn't just hurt your account, it distorts your mind. When you trade too large, every tick feels personal. Every candle becomes a threat. You stop following the plan and start reacting like a cornered animal. But when your size is appropriate, you stay calm. You let the setup play out. You accept the loss if it happens, and you move on like a professional. You want freedom in trading? It's not found in more indicators or better strategies. It's found in consistent position sizing. That's the real edge. Now let's go deeper. Most traders lose not because their system fails, but because they panic when their size is too big. Their hands sweat, they move stops, they close early. They act like gamblers trying to hold on to chips, not professionals running a business. But imagine this instead. You size every trade based on logic. You know your risk down to the dollar. You accept it before you click buy. That's what gives you psychological control. Not mindset books, not motivation quotes. Just pure mathematical confidence. Let me give you one final analogy. A pilot doesn't fly a plane based on vibes. He runs checklists, instruments, systems. Why? Because when you're 30,000 feet in the air, emotion kills. Same in trading. You're flying capital at high speed. You don't guess your altitude. You check your position size. So here's your rule from now on. Size small enough to think clearly, but large enough to matter. And let your system, not your mood, decide your risk. Because you will never master the market, but you can master how much you expose to it. Control the size. And the market won't control you. Leverage is not power. It's a loaded weapon pointed at your own account. Let's stop sugarcoating it. High leverage is seductive. It whispers promises of fast profits, small capital, big wins. It tells you, why trade one lot when you can trade 10? Why grow slow when you can explode in weeks? You saw that guy on Twitter, right? 500% in a month. But here's the truth every seasoned trader learns the hard way. Leverage is not your friend. It's not a tool. It's a test of your self-control. And most traders fail that test. You see, leverage gives you access to money that isn't yours. And when people trade with money that isn't theirs, they behave recklessly. Why? Because when you don't feel the pain of losing, you forget to fear risk. Let me show you what that looks like in real terms. You have a $1,000 account. Your broker gives you 1/100 leverage. That means you can open a position worth $100,000. Sounds amazing, right? Until the market moves just 1% against you, and your entire account is gone. That's not trading. That's Russian roulette with your portfolio. Now you might say, but I'll use tight stops. I know what I'm doing. I'll get in and out quick. Let me tell you something from experience. When you use high leverage, your stop loss becomes irrelevant because even a small wiggle can blow you up. There's no room for error, no space to breathe. And when the trade turns against you, you panic, you freeze, you blow up. Ask anyone who has been in the game longer than 5 years, they'll tell you the same thing. The traders who survive long-term use low leverage and high discipline. The ones who don't, they vanish. Accounts gone, confidence shattered, dreams dead. Now let's flip the script. What happens when you use minimal leverage, 1 to 5, maybe even 1 to 1? You stop chasing. You give your trades breathing room. You focus on quality, not quantity. You hold trades with clarity, not fear. You start trading like a portfolio manager, not a gambler. And guess what? You still make money, just not in one wild week, but in quarters, in years, in real growth. Think of it like weightlifting. Leverage is like adding more plates to the bar. Sure, you can bench more for 1 rep, but your form breaks and you blow out your shoulder. Meanwhile, the smart lifter works clean, steady, controlled. And 10 months later, he's strong, injury-free, consistent. Same in trading. Here's what I recommend. Start with the smallest leverage possible your broker allows. Treat every trade as if it's your real capital at risk, not borrowed firepower. Size your trades so you can sleep at night, not sweat bullets. Never increase leverage just because you had a good week. That's ego, not edge. You want to impress someone? Don't do it with oversized positions and short-term P&L. Do it with consistency, with control, with an equity curve that grows like a business, not a lottery ticket. Because here's the secret. Leverage doesn't create wealth. It exposes weaknesses. If your system doesn't work with 1-1 leverage, no amount of borrowed capital will save it. If your mindset collapses when position size increases, leverage will magnify that collapse. So be smart. Use leverage like a surgeon uses a scalpel. Precisely, rarely, and with total awareness of the risk. Not like a kid swinging a sword in a china shop. The market rewards consistency, and nothing destroys consistency faster than high leverage and low patience. Trade small, think big, live to fight another day. Trade the system, not your mood, not your gut, and definitely not the news. Let's talk about the #1 reason traders fail. It's not because they're dumb. It's not because their strategy sucks. It's not even because the market is too volatile. They fail because they don't follow a system. Or worse, they think they do, but they don't. Here's what it looks like. Monday, they trade breakouts. Tuesday, they try mean reversion. Wednesday, they scalp news events. Thursday, they take a crypto swing trade based on Twitter. Friday, they revenge trade to make back what they lost on Thursday. Sound familiar? This isn't trading. This is emotional improvisation. Every decision is based on how they feel that day, what they just lost, or what someone else posted online. They call it being flexible. They call it adapting to the market. But really, it's fear. Fear of missing out. Fear of commitment. Fear of doing the boring, disciplined work that actual trading requires. Let me make this clear. The market doesn't reward variety. It rewards consistency. And consistency only comes when you have a proven, tested, written system, and you follow it like a machine. I don't care what your system is. Price action, moving averages, order flow, Elliott wave, whatever. But if you don't follow it with discipline, it doesn't matter. Even the best strategy in the world can't save you from inconsistency. Now, what is a system? It's not a feeling. It's not a setup you saw once on YouTube. It's a clear set of rules. When to enter, when to exit, where to place your stop, how to size your position, what market conditions to avoid, how to track and review every trade. And here's the key. That system has been tested over hundreds of trades. It has a positive edge, and you can follow it without asking, what should I do now? Because if you're asking that in real time, you're not trading a system. You're reacting. And reactions are where accounts go to die. Let me tell you a story. Years ago, I met a trader who was obsessed with setups. Every week, a new idea, new indicators, new timeframes, new assets. He was smart, worked hard, but had no consistency. His equity curve looked like a heart monitor. Up, crash. Eventually, he burned out and quit. Now compare that to another trader I know. Same firm, quiet guy, traded only one setup, only on EUSD, only during London session, 1 trade a day, max 2. His strategy? Boring as hell. But he was ruthless with execution. Same rules every day, no emotion. No deviation. Fast forward 2 years, he was managing 7 figures. What's the difference? One chased signals, the other followed a system. One was excited, the other was consistent. One wanted to feel smart, the other wanted to stay in the game. That's the lesson. Your job is not to trade what feels right, it's to trade what your system says is right. Now ask yourself, do I have a written trading plan? Do I know exactly what setups I'm allowed to take? Do I track my results to validate that edge? Do I stop trading when the setup isn't there, even if I feel bored? If the answer is no to any of those, you're not trading a system. You're just winging it with a chart in front of you. So here's what you do starting today. Define your exact edge. Backtest it until you believe in it more than you believe your emotions. Write out your rules. Follow them without exception. Track every trade. Improve based on data, not feelings. Because here's the truth, discipline will beat brilliance every single time. You don't need to predict the market. You just need to control yourself. And a real trading system is the leash that keeps your emotions on a short chain. So next time you feel the urge to go with your gut, stop. Open your plan. Ask, does this trade match my system? If yes, take it. If no, skip it. No emotion, no debate, no drama. That's how professionals trade, and that's how you stay alive. Survive first, thrive later. Trading is not a sprint, it's war. Let's end this with the one truth that separates traders who make it from those who don't. Survival. Simple, unsexy, overlooked. But it's the real goal of every trade you take. You see, everyone gets into trading with dreams, financial freedom, a bigger house, firing the boss, travel, Lamborghini, if we're being honest. And that's fine. We all start there. But let me tell you what no dreamer tells you on Instagram. You don't get any of those things if you blow up your account. You don't get rich if you don't survive. You don't even get good because you won't last long enough to improve. Trading is not about brilliance. It's about endurance. Every market cycle will test you. There will be losing streaks, false breakouts, choppy price action, news that ruins the perfect setup, and worst of all, your own mind, second-guessing every move. You can have the best strategy in the world, but if you can't survive emotionally and financially when it goes through a drawdown, you're gone. Just another blown-up statistic on the broker's ledger. Let me make this clear. Your number one job as a trader is not to win. It is to stay in the game. Because if you stay in the game, you can fix your edge. You can learn from mistakes. You can adapt. You can grow. But if you go all in emotionally, financially, or mentally, you don't just lose a trade. You lose the right to come back. So what does survival look like? It means respecting your stop loss even when it hurts. It means walking away after 3 red trades instead of forcing a 4th. It means trading small until your edge proves itself. It means missing trades that don't align with your plan, even if they look good. It means saying, not today, when your mind is off, your emotions are loud, or your energy is drained. Survival means you trade to fight again, not to prove something today. Let me tell you something that changed how I see this game forever. A mentor once said to me, if you treat trading like a get-rich-quick scheme, it will punish you. But if you treat it like a career, it will reward you like one. And he was right, because the traders who treat this like a business, they have rules, they have budgets, they control risk, they review their work, they think in quarters, not in daily P&Ls. They may not have the flashiest setups, but they have one thing that most traders never reach: consistency. And consistency compounds. Here's a truth that might surprise you. Most million-dollar traders were still average after year 1. They didn't crush it right away. They weren't market wizards on day 90. They were alive. They had capital. They had records. They had lessons. And they kept going. That's it. Not magic, just survival. So what mindset do you need? Think in years, not weeks. Measure your process, not your profits. Celebrate small wins, not just big ones. Forgive losses, but study every one. Aim for control, not excitement. And remember, flat is a position, and cash is a position of strength. Because in trading, the prize doesn't go to the fastest, the flashiest, or the loudest. It goes to the last one standing. The one who stayed disciplined when others lost control. The one who sized down when others doubled up. The one who followed their system, took the cuts, and played defense like a general. That trader, That's the one who wins. So next time you feel the itch to go big, to break rules, to bet the farm, ask yourself, does this move help me survive, or does it just feed my ego? Because here's the truth. Wall Street never says out loud. The best traders aren't fearless. They're cautious, measured, patient. They survive, and because they survive, they thrive. At the end of the day, this game isn't about finding secrets. It's not about buying the magic indicator or copying someone's signals. It's about becoming the version of yourself who can trade with clarity, courage, and control. It's about mastering the mindset, not chasing the money. And most of all, it's about never letting one bad day erase your future. You don't need to win every trade. You just need to stay disciplined, stay alive, and stay focused on the long game. Because in trading, like in life, the ones who last win. If you found value in these lessons, if you're serious about leveling up not just your charts, but your mindset, then this is just the beginning. Subscribe to Trading Mindset Lab now, where we break down the psychology, habits, and frameworks that actually build profitable traders. No fluff, no hype, just straight talk, real strategy, and battle-tested mental tools for the market. Weekly audio breakdowns, book-based insights from trading legends, practical tips to avoid blowing up, mindset upgrades to survive and thrive. Hit that subscribe button, because the best trade you'll ever make is investing in the trader behind the screen.